Good afternoon, everyone. Welcome once again to this HBL Sales and Implementation Training Program. Thanks for being available. Thanks for the commitment so far. Yesterday, we were able to start this session, and we were able to take some introductory classes as well as brief introduction to the OyarSync ERP accounting module. Today, we'll be continuing the session on accounting to HBL2, and we have our seasoned facilitator amongst us today. Today, we'll be taking us on the concluded parts of the accounting module, and by the time the class starts, be reminded that there will be some feedback sessions, asking us questions about what was learned yesterday, and if you have any challenges, you'll be more than ready to take up these questions and answer them for us. Briefly, I would love to remind us that this training program is courtesy of the OyarSync Group, and it is championed by the Talent and Systems Division. We've set up this program to upskill us. We've set it up to give us an inroad to another menu-making opportunity. Also, as we've discussed earlier on, we'll be expected to fill some non-disclosure agreements. Every training material and content here remains the proprietary documents of Talent and Systems of the OyarSync Group. And as such, we are expected to keep everything strictly confidential. Right now, I'll be giving the floor to our facilitator for today, Mr. Tokwe Tuwulawi, as he takes the class. Thank you.
Good morning, everybody. So good afternoon, everybody. Can you all see my screen?
Yes.
Yes.
Okay. Good afternoon, everybody. So we'll be starting today's class by, first of all, starting with revision from the last class. So I'll be going through. Let me check the attendance. Okay, so I'll be going through the list of people I have present today, and I'll be asking questions. I don't know if someone can give us a revision of what we did in the last class. Hello, can anybody hear me? Hello.
Yeah, I can hear you.
Yeah, can anybody give us a recap of the last class?
Last class we talked about a
Yeah.
brief introduction to the accounting module. That's when you described what the accounting module actually is, and the tools under it, the tools, the reports, the tools that are actually used to carry out these activities. Then you talked about chart of accounts. That I think you talked about like basic setup, the three basic setup that we need to start OyarSync. And that's when you talked about the chart of accounts, the opening balance in accounts, and the cost center. Then for the chart of accounts, you mentioned that it's basically a tool that is actually used to set up ledgers, the relevant ledgers that for accounting purposes. on the OYASync app. And you talk about that there are 5 major categories of this. Talk about the asset, liabilities, equity, income, and expenses. We talked about what assets are. We talked about that we have 2 major categories of assets. As fixed, talk about the fixed assets or the current assets and the non-current assets. Talked about liability. You talked about the non-current and the current liabilities too. And income, you talk about capital and so on. And we talked about opening balance in the opening balance in an account. Talk about it basically just transferring a closed balances of a particular software in an organization, then transferring that kind of closed balance to the OYASync app. And the tools that I actually major used to set this up, we talk about that is
thank you,
journal
Mr.
entry.
Mayowa. Thank you. It's very, very clear that you've been following. I also want to just get other opinions from other participants so that it doesn't appear like it's only Mr. Mayowa that is in training. So can I get feedback from other participants that were present yesterday? I have Mr. Eric, I have Olivier, I have Ubong, I have Oladimeji. Please, can you please give us a quick recap of what we did yesterday? Just a quick recap. Okay, if you cannot give us a quick recap, can you just notify so that we can know where to start?
Okay. Yeah. Good afternoon, everyone. So yesterday we talked about a lot. We talked about how, like if you get a new client, how to set up. Can you hear me?
Yeah, me too.
So we talked about how to set up, like for a new client, how to set up the basic account, both for fixed and for current assets. So we talked about switching from their legacy systems to ERP. Then for maybe accounts that don't balance, we talked about suspense accounts. That's like a temporary account for temporary transactions that are not balanced yet. So we talked about journal entries. We talked about purchase invoice and sales invoice. I think we talked about what else? I know we talked about a lot yesterday though.
Yes. So I also want to be sure that all of us are following, and it's not just like people are just logged into the meeting and they're actually not following yet. So that's fine. Thank you very much, Mr. Eric. Okay, so we'll be continuing from where we stopped yesterday. I don't know who can remind us where we stopped yesterday. Someone different from the first two speakers. Can someone please remind us where we stopped yesterday?
We stopped at journal entries.
Sorry, this is Mayowa. I wanted someone. Anyways, that's fine. So I'll just take it that I have just 2 people participating in this class, and you'll be giving some form of certification. You get the class is going to be interactive. And I believe that we're given a period where we're meant to do our own personal reading that will facilitate this particular training session. So it appears to me that a lot of people are not prepared. A lot of people are, how do I put it? They are not really paying attention for this particular training session. So thank you very much, Mr. Mayowa. Thank you very much, Mr. Eric. So we'll continue from where we stopped. Okay, so we stopped at journal entries yesterday. But before I proceed, I'll just quickly do a quick recap on what was taught yesterday. So we started, this is the outline, and you can use the outline as a guide to do your own personal revision. So we started with the introduction to the accounting module, and I made it very clear that the accounting module consists of two types of, let's say you have two things that you need to look out for when you're using the accounting module. You have tools and you have reports, and I explained that every option, once you open the accounting module, every button that you see is either a tool or a report. And I explained that tools are used in inputting data into the software, into the ERP. Use it in manipulating the ERP. So you have different tools. So it is the tools that you use in running your accounting. Then you also have reports. So every other thing you see there is a report. So if you click on something and it doesn't perform an action, it's either it generates a report for you or it enables you to set up something or run an action. Then we looked at some of the few things that the ERP does. We looked at billing. We looked at the fact that it enables us to do tax, budgeting, and it enables us to do it enables us to spool out accounting reports. And I explained that the accounting report on the ERP is not just limited to financial statements, where you have cash flow, you have P&L, you have income statements. That you also have other types of accounting reports like sales invoice, sales register, sales reports, purchase reports, and you also have accounts receivables reports. So there are so many reports that you can lay your hands on the system. So when we were done with that, we also looked at some basic setups. When I mean basic, the most important things that at least you should have at the tip of your finger when you want to use the system. And we started with the chart of accounts. And I explained yesterday that the chart of accounts enables you to manage your ledgers. And you know, the whole concept of accounting is all about posting transactions into different ledgers, debit and credit. You credit one ledger, you debit one ledger. You debit one ledger, you credit one ledger. Now, what enables you to be able to create ledgers and manage ledgers, and even in some cases, view ledgers, is your chart of accounts. So it's very, very important. Without having the correct ledgers opened up on your ERP, you cannot do anything. So I explained and I use an example. You have a new bank account for the company. If you've not created the ledger on the chart of accounts, you will not be able to do anything. You will not be able to post into that ledger. So we looked at that aspect of chart of account. Then we also looked at opening balance in accounts, and I explained what it means. Now, opening balance in accounts, probably maybe I'm sure I mentioned this yesterday, but just for the sake of making the revision comprehensive, usually happens when you are transiting from one system to another system. And I use the word legacy. So it means you might have been keeping records somewhere before. That's before you discovered that you could use the OyarSync ERP to manage your business, and you want to move away from that particular system to the ERP. Now, opening balance in accounts enables you to be able to move your record. And I made it very clear, and I gave my recommendations, and I said that when you are doing that, the day that you start using the ERP, the OyarSync ERP, the opening, the closing balance from whatever system you have, the balance sheet that was specific, those balances is what you would put in your opening balance on the system, and that will enable you to continue from where you stopped. The major tool that you'll be using for that is journal entry, and that's the recommended tool. And I took us through how you will use the opening entry type of journal on the journal entry to impute most of all these things. The basic things that you need to impute, we all looked at it together. I entertained questions and the likes. I also showed us an alternative way. I showed us other alternative ways. If you want to bring it in piecemeal, using the journal entry also, we also looked at that. And we looked at the effect on the account. Then the last but not the least that we looked at yesterday was the cost center. And I explained what the cost center is, and I gave my recommendations on how best to use a cost center. I gave the scenario of a hotel having identifiable and distinguishable business segments. Then we moved over to the billing, and I explained to everybody that even if you don't really know anything about, you are not a business person, you are not, everybody knows that if you want to go into business, the major thing that you'll be doing is you'll be buying and you'll be selling or renting a particular service. So it's just as simple as ABC. So that process of buying and selling, what you'll be doing is you'll be billing, you'll be running a lot of bills. So you have bills that has to do with selling, you have bills that has to do with buying. And I also chipped in the fact that you would also be incurring some form of expenses. And these expenses will come in form of bills. So you can have refuse bill, you can have electricity bill and the likes. Now, how do you manage all these bills? So on the accounting model, the two tools that enables us to manage our billing correctly and effectively is our sales invoice and our purchase invoice. And we looked at different examples. We used the sales invoice, we used the purchase invoice. And we took it a step further on using the purchase invoice to capture expenses. So we use the purchase invoice in capturing expenses, and we looked at the implication on the accounts. Then we also looked at some reports. We looked at sales reports, we looked at purchase reports, and it's self-explanatory. It's something that once you export, it's garbage in, garbage out. You can see all the sales transactions, you can see all your different purchases, and the system would carefully help you break down that information, and it's exportable also. I exported one yesterday. And then we took it a step further to look at the journal entries, and that was where we stopped. And I explained to you guys what the journal entry is for. The journal entry can perform practically any type of transaction. Typically in accounting, journal entry is like the bedrock of accounting, because it enables you to post directly into different ledgers. Now, you can use journal entry to run different transactions, but I made my recommendation that you would use journal entry basically. So your billing is advisable to use the sales and purchase invoice tool, But when it comes to, yes, some part of billing that has to do with expenses, you might opt to use the journal entry. And also when it comes to other transactions, other financial transactions, and I explained and I use example of introducing capital into the business. There are so many other examples. You can go online, check for different. You can look at journal entry on its own. So it's just representing whatever accounting transaction that you see anywhere. If every accounting transaction is going to have a debit entry and a credit entry. So it's just for you to reflect it on the system. And that's why we started with the chart of accounts. You ought to have opened the ledger. You can only post into a ledger that is created on the system. So once you know how to create your ledger under the appropriate category, like Mr. Mayowa said earlier, then you can do what? Then you can comfortably post using your journal entry. And I also said that typically journal entry should have a narration, so that when somebody else is reviewing all the entries that have been posted, the person can also look at the narration. So that is where we left it yesterday. So quickly we'll be looking at the mode of payment and the payment entry. So what is the mode of payment? Sorry, please, 1 minute. Okay, so what is a mode of payment? Now, I just use my own terminologies in explaining it. So mode of payment facilitates the movement of funds to the appropriate designated bank or cash account to settle a financial transaction. Then what's the payment entry? The payment entry is used to settle payments for financial transactions. It is also very useful to settle bulk payment requirements. So we'll go into the ERP now and we'll take practical example. Now, practice makes perfect. The more you practice, the better you get on using the system. So this is the accounting mode interface. We can see we have the payment entry, but if you scroll down, you see the mode of payment. Now, let's open up the chart of account again. Now, mode of payment, typically what you are looking at, what you look at in the mode of payment is making sure that money enters the correct ledgers. Sorry. So if we look at the chart of accounts, we can open our current asset and look at our bank accounts. So we can see that we have Access Bank and we have GT Bank. Now, we want to create relevant modes of payment for both Access Bank and GT Bank, such that if we want to make payments, money enters into this account without any problem. Now we have our search bar or our navigation option. You can just check for mode of payment and you see your mode of payment list. Now for your mode of payment list, most of payments have been created. Now, what you just do is you click on add a mode of payment. So the first mode of payment we want to add is let's say POS. Now you can, what you need to do is whenever you are creating a mode of payment, you must create it in a manner that is very easy for the person using it to use it. So some places you might start with POS, some places you might start with the name of the particular POS that you are paying into, so that you can easily make payment. So we can start with we can name it POS, or let's call it access. Now you click on edit in full. Now once you click on edit in full, you change this from cash to bank. You add a row and select access bank. And save this. Now another fast way of, okay, let's do it. Let's do for transfer also. So you can do access transfer. Change this to bank also. And leave this as access bank. Save this. You can do for GT Bank also. Save this. And you can also do for transfer. So you save that. So with that, we've created our mode of payment. Very simple. So a mode of payment is actually a very straightforward and very easy thing to do. But the reason why we do it is to enable us, when we are running our payments, to make our payments very easily. Now, the payment entry tool is a tool that you can use it in actually different ways. You have the payment entry tool outside, but if you open our purchase invoice, let's first of all open our purchase invoice. We will see some certain transactions. You can see almost all the transactions. Overdue, overdue, overdue. We need to make payments for these transactions. If we open our sales also, you'll see a couple of transactions there also. We'll see unpaid, we'll see overdue. But just to refresh our memory of what we did in the last class, let's make a couple of sales. Now to make a sale, click on add sales invoice. One of the most important things is to make sure that you put in the correct customer. So let's use a new customer for the purpose of today's class. So you can use Franklin. And let's edit the posting date. So let's make it first. Then scroll down. I'll just make a fictitious sale. Okay, I just want to select a product. Okay, let's use arithmetic calculator. Let's just assume this person is buying 10. So we made a sales with Franklin. Now we can duplicate this transaction. Let's duplicate it. I want to make a second one. This time around, I'll put the data seconds. The same transaction. I'll save this. And I'll submit it. Let me make a third one. And I'll put it on third. I'll save it again. And I'll submit it. Now, most of the time you usually advise not to make credit sales, but there are some times whereby you make credit sales to a customer and that customer will have a great deal of invoices. The customer will have a lot of invoices. Now, the reason why I duplicated Franklin 3 times is because if we look at our sales invoice now, we'll find out that we have 3 outstanding payments from Franklin. Now, how do we clear these 3 outstanding payments from Franklin? If Franklin is a customer that just comes around and says, okay, how much am I owing you? How much am I owing the business? And says, okay, fine. I want to clear a certain amount of money. Now we can see that client Franklin is owing us 450,000 naira. Now, how does the payment entry to work for bulk payments? So you go to your payment entry and you add payment entry. Now, once you add payment entry, you leave this as receive. If you want to receive, you leave it as receive. If you want to pay, probably we'll look at pay also. Then the mode of payments is, let's use Access Bank. So we can use Access Bank transfer. Once we've selected that, scroll down. We select the party. Definitely the party is a customer. Then to ask you for the party name, then you type Franklin. And you select Franklin. So once you select Franklin, because we already selected the mode of payments, if you look at this, if I click on this account, you can see that it has already said it's paying the amount to where? Access Bank already, because we selected the correct POS payment. Now note, Franklin is owing us 450,000 naira. Let's say he wants to pay 350,000 naira. Now we don't want to be selecting the invoices one by one and start clearing them with the person wants to pay 350,000 naira for now to know how much he will be owing the business after he has made this payment. You select it. Then once you've selected it, the next thing you go is you click on Get Outstanding Invoices. When you click on Get Outstanding Invoices, there's usually a range here. So you have to make sure you select the range, you arrange the range the way it's meant to be. So you can see that this range is saying from 7th of last month, February, to 9th of this month. Definitely, I know all the transactions that have. So you can make it as early as possible. Some you can decide to just put it at the beginning of the year just to be on the safe point. If you want to pull out all the outstanding invoices. So you can also use the due dates to search for it. You can use the posting date or the due dates to search for outstanding invoices. So once you are sure that the posting date, the date is correct, you just click on what? Get outstanding what? Invoices. Now, once you click on Get Outstanding Invoices, you will notice something. You'll see that he has 3 invoices with us, and the 3 invoices has been spooled out already. You can see the first one, you can see the second one, you can see the third one. Now, what the system does is it will spread the payments on a first come, first serve basis. Now, it's only not 350,000 naira. The first bill was 150,000 naira, and it is clearing it completely by allocating 150,000 naira to it. The second bill is also 150,000 naira. He's allocating 150,000 naira to it. The third one is 150,000 naira, but he's paying only 350,000, and what will be left is 50,000. So the system is going to allocate 50,000 naira to it. So once you are done with that, the last but not the least is for every form of bank transaction, you must always do what? You must always impute a payment ID. Now, under the payment ID, you see what we call check/reference number. Now, in simple English, what that means is, if you notice, if you make any transaction you make in Nigeria, there's always a reference number on that transaction. If you send money to somebody on your app, when you download that receipt, there's a reference number there. If someone should send you money too, if you receive money, there's always a reference number. That reference number is what is asking you for. Now, in some cases, you might have access to it, and in some cases, you might not have access to it. You're already someone checking the number. So in case you don't have access to it, or it's your organization does not really deem it necessary, what you can always put here is just to put the date. So we'll put today's date there. Let's just use today's date since we don't have the reference number. Then for the date, just put today's date there. Save this document and you submit. Now that is how the payment entry works. Now, usually you use the payment entry outside when you have bulk payments that you want to do what? You want to service. So instead of you to now start looking for Franklin, because this is a very simple example in the sense that we don't really have high volume of sales, but just imagine a scenario whereby you have a very high volume of sales. You get this sales invoice will be very, very cluttered. You'll be seeing different transactions, and you might not be able to just start picking those transactions out one by one and making payments for them. So the payment entry tool is very used when you want to make bulk payment transaction, but it's not limited to bulk payments. Even single transactions also, you can make payments for single transactions. Now, the reason why I said bulk payment transactions is because the process might look too lengthy for just one payment. So the payment entry tool has 2 functions actually. So I showed you the very first function, which you will get outside on the accounting module. You see the payment entry and you can explore that route. Or, for example, now you can see that this Franklin, there were 3 invoices that were outstanding. Now we use the payment entry tool and it spread the payment across these 3 invoices. It's completely paid off the first and the second one, but the third one was not completely paid off. If we open it, it opens the sales invoice for us. Now, once it opens the sales invoice for us, this your connection is this is a very important to it gives an information of what has happened on that bill. So if you look at this bill, for example, you can see that this is showing one. What that means is that one payment entry has been made on this bill already. So 50,000 naira has been made on this bill. So it means that if you open this particular, if we want to make payment for this particular bill, the person should be paying another 100,000 naira to write it off. So if you come to create and you click on payment, it takes you directly to the payment entry from inside of the sales invoice. So this is another way of using the payment entry. Then you just come here and you slot in the mode of payment. Let's use GTB this time around. GTB transfer. Once we use GTB transfer, if you scroll down, you notice that the amount to be paid now is showing 100,000 naira because it has already taken into consideration that 50,000 naira payment has already been made earlier. So we scroll further down to the transaction ID that I mentioned earlier, and we put today's date also. So with that, we are done. So if we should go back to the sales invoice, we can always refresh it. You see the sales invoice changes to paid. So that is how our payment entry works. Now, it is not limited only to the sales invoice. It works for also the purchase invoice. So if I open the purchase invoice, this payment is outstanding. Now click on it. Now click on create payment. It asks you where are you making the payment from. And choose access bank. POS. That's the name. It tells you how much do you want to pay. If you want to clear the entire bill, you can leave it at 100,000. Then you scroll down to the transaction ID. Put in the transaction ID. And declare that. So that's that. So that is how the payment entry and the mode of payment entry, that is how it works. So do you have any questions before we move on to taxes and budgeting? Any questions? The floor is open. Okay, so once I'm done, I'll call somebody and I would paint a scenario and I'll need your guidance in solving those problems. So if you're not asking questions and I ask you when we are done and we paint a scenario, it means that you've not participated in this training course. Okay, so let's move on to taxes and budgeting. So if we look at our accounting model, so one of the major tax that I'm very sure we are all familiar with is the VAT, the 7.5% VAT that is paid on consumption. Okay, so if you scroll down, let's even scroll down to explore the accounting module very well. So one thing that comes to mind as you are scrolling down is that you look at the accounting module and you notice that it is very, very robust. You can see the accounting masters, you can see general ledgers, you can see accounting receivables, and you can see so many options under it. Now, these options, most of them are either tools or some reports of some kind. You can see accounts payable, you can see reports, you can see financial statements. You scroll down, you can see multi-currency. You can see settings, you can see payment gateway, so many, the mode of payment that we looked at, the bank statements, shares. There are so many options. You can see opening and closing. So the system is very, very robust. Aside from the system being robust, the system also allows for customized reports. Now, this will be taught by, or no, you can't. So you have customized reports whereby you can customize reports on the ERP. So it means that you can have your own customized sales reports in a particular manner that you want it to come out. You can customize those reports. But looking at taxes, we can see that we have sales tax and charges templates under taxes. Okay, so on is it just the slides? It's just the slides we are seeing. Okay, sorry. Okay. Okay. So can you see my screen now? Can you see the ERP?
Yes, thank you.
Okay. So we can see taxes, and under taxes we have the sales taxes and charges template. We have the purchase tax and charges template. We have the item tax template. So we have so many things that has to do with taxes here. But we're looking at the sales and the purchases. So if we open the sales, for example, you notice that one has already been created. If you open it, you see the Nigerian tax has been created, and scroll down, you see on net 5%. Now we want to create our own tax. Let's just assume we want to create the name of the tax. Let's call it so you can make it default in a manner that it comes out automatically. Now you add a row. I need to ask you, what expense head do you want to link this to? I want to believe that we already created. Okay. Okay, 1 minute. So what percentage do we think VAT is? So the percentage is 7.5. So you click on 7.5 and you save this document. Now this document has been saved, and this brings me to two different concepts. So now we can see that the document has been saved, and if you click on this edit button, you have two options. You have making it okay, so you have so there are so many other options, but for today's class, we're looking at making it inclusive or making it exclusive, making the tax inclusive and making the tax exclusive. Now, for you to make it inclusive or exclusive, or let's first of all run the tax. You can read these options. You see, is this tax included in the basic rate? Now said, if checked, the tax amount will be considered as already included in the print rate / print amount. So it means that once you check this amount, check this box, it means that the tax is already has already been included in the rate of what you are selling. So let's just run one or two examples. Since we've already created the sales tax, let us make a sale. So let's go back to Franklin. So let's scroll down. Let's select those our calculators again. Now, I think we use calculators. So let's assume it's buying 20 calculators. So 20 calculators will cost him 200,000. Now let's scroll down. You can see already, because of we checked that box when we're creating it, we made it default. When you click default, it means that each time you make any sales on the system, automatically to add 7.5% VAT on it. So you can see that VAT has already been added 7.5 VAT, which brings 7.5 VAT is 15,000 naira, which brings the total bill for Franklin to 215,000 naira. Now let's save this. And let's submit this. Now this has been submitted. Let's quickly just look at the implication. If we go back to the accounting, let's even look at the sales report. Let's use the sales register now. So if we open the sales register, we can see that we have the dates here, but let me just filter Franklin out. Now, if I single out Franklin and I scroll, I'll see all the transactions that I've made. But you would notice one thing: sales, net sales. You can see that this one has VAT. So you see the total sales is 215,000 naira, but the cost of what we sold to Franklin was 200,000 naira. But the system did what? the system added what? VAT of 15,000 naira. Now, let's explore the second option, which I said there are some times whereby you want to make tax what? Tax inclusive. So if I click this and I check this button, then I save this. So I think I saved this already. Let's go back. And okay, before we even do that, okay, let's look at the VAT ledger. This is the VAT ledger. We've not refreshed it, but if I click on view, you find out that there's 15,000 naira inside. What that means is that you've collected money on behalf of the government and you've not remitted it. That's why they say 15,000 naira inside the VAT. So let's go back to what we're doing. So we go to sales invoice. Now this time around, let's visit Franklin again. So Franklin, we can even leave the data to the place. Let's go down. It doesn't change anything. Now calculator, right? How many did you buy the last time? You bought 20. You can see it's 200,000, right? Now let's go down to the tax. You can see this time around, the tax is showing 13,900 and what? 53 naira 49 kobo. And you can see the total is still 200,000 naira. If you scroll down, you find out that the total bill that Franklin is still meant to pay is what? 200,000 naira. The reason why it's still showing 200,000 naira is because of there are some cases whereby you would instruct the system that you don't want your customer to be paying some decimal based payments. So someone is coming to your hotel and the person is paying for a room. The room is worth 200,000. You don't want the person to be paying 200, or let's say 215,000 naira. That's the amount. You don't want the person to be paying 7.5% or 250,000 naira. That will bring the bill to a particular amount that might not really, that will be showing kobo or something like that. Well, there's no case. It depends on your business. You can either make your transactions tax inclusive or tax exclusive. It's just as simple as ABC. You get. So if you go to like a Chicken Republic and you want to buy chicken pie, you find out that their chicken pie is how much now? Is it 300 naira? 350. You get. Inside that 350, when they print out the ticket for you, you find out that the actual cost of Chicken Republic the chicken pie is not actually 350. It will be like 300 and something. Then you now see that they charge you for VAT. You get. So they usually make their own bills tax inclusive. But some other places, when you get there, you ask them, oh, how much is my bill? They'll tell you, okay, this food costs 300,000, sorry, 300 naira. But you're going to pay VAT of 7.5%. So once the person punches it, you get it will bring out the value at 300 and something naira. So depends on what you want to do. So at the point of making the sale, you just need to let the person know that you are paying VAT or whatever. So that's the major difference. So I'll save this. And I'll submit. So if you go back to the accounting, let's look at the sales invoice. So the sales report. Filter out Franklin. So you can see the sales is not 200,000 because of tax was inclusive in this particular transaction. And if you look at the total sales transaction, you find out that it's 200,000 versus the first one that was 215,000. So that is how tax works. That is the basic thing about tax. That is how tax works. The next thing I'll be looking at is you need to know how to use your journal entry. So I'll just go back to journal entry to just reiterate this point. So if you go back to our chart of accounts, because I was someone mentioned something about accounts yesterday. You see this VAT. If you view it, you find out that now what we have there is 28,953,049 kobo. But this money in actual sense does not belong to your business. You are meant to remit it to Federal Inland Revenue Service. Although I think there's a case whereby the state wants to be collecting VAT now, but regardless of whatever outcome, currently I think it's still the Federal Inland Revenue Service that has jurisdiction to collect VAT. So what that means is that this money, you are meant to pay it into their account. Now, when you are making this payment into your account, there's a law that governs VAT, so you can always check that out. Let's just assume now we know that we are owing government 28,000. Let's just say that they want to remit it. Let's just say you want to remit 28,900 naira. You get the remaining 53. Let me see 53 kobo. Sorry, 53 naira. Let's just remit it to the government. Now, this is where your journal entry tool comes into use or into effect. I can come. I can click on my journal entry. I think I didn't use, let me even use bank entry. I can make it bank entry. I select the date. I come here. I select my VAT. I'm paying 20. Let me just see. I can't remember 28,000 naira. I think that was 28,000. I'm not paying everything. That's why. The money is coming out from Access Bank. Scroll down. Reference number. So I'm also asking for reference number since it's bank. So just put the date here. Put the date. Okay. VAT. So if you go back to the VAT and you do the ledger now, you find out that what you are owing now is just 955,000 naira 49 kobo. So you can see this was what we're owing Federal Inland Revenue Service, and we paid 28,000 naira out of it, and this is what is left. So if you go back to it now, even from outside, so at times you might just need to just refresh. So you can see now that we reduce our liability to just 953,000 naira 49 kobo. So that takes us, that completes our tax class. Any questions before we take it a step further? Hello, any questions? Okay, fine. So I assume that we don't have any questions. Now budget is just, it's pretty much straightforward. So you can search for your budget, or you can just scroll down and click budget, and it brings out your budget for you. It asks you, budget against cost center. So this budget is against this particular cost center. So you can put budget cost center against so you can have different budgets for different cost centers. Now it puts the monthly distribution. Now the thing is, you can create a monthly distribution for your budget, or you can just leave it to run annually. You scroll down. When you scroll down, you can see different control actions. You can see applicable on material requests. Most of all these things will be taught. So this is outside of the accounting module. But you most likely do material request, purchase orders in other sessions. Sorry, someone wants to ask a question. Hello, someone's mic is on. Okay. So the way a budget typically works here is you just select the account that you want to create a budget for. So you can see marketing expense. What is our budget for marketing expense? You can see it's 500,000. Right? You can also add budget for legal. You can say it's 200,000. And also, so you can add budget for practically anything. You save it. And you do what? You submit it. Now, note I created a budget for legal expenses. Now, let's assume that incurring expenses for legal expenses. Let's see how the system is. So now this is an annual, it's based on an annual limit. So let's go back to the accounting. So that we can use our purchase invoice for a lot of things. So let's use it to capture this expense. So I'll be doing 100,000 naira. Let me see that. Okay, so also when you can just by default attach it to a particular expense head. So that saves you the stress of always coming to use that particular expense in the future. Always changing the expense head. So Legal expense. So I've created my legal expense. So let's go down. So if you scroll down and you look at the expense head, the expense head is already saved as legal. So I can scroll back out and see my legal expense is 100,000. So it's just to make it look legal fee for major. Just this out. Okay. So someone selected or 72. There's a color information on the item. Hey, please, Mr. Agba, can you mute your mic? So, I'll select legal fee again and just put it there 100,000. There's a warehouse that is speaking. Sorry, please, can you mute your mic, Mr. Agba? Okay, let me do it over again. Let me refresh the page. So I'll select the supplier. Use like so I'll submit this document. Oh wait, did I put the amount? Let's put the amount as 100,000. Okay, so we save this document. Submit. Okay, so we submitted it, legal expense. Then let me duplicate this and try doing it a second time. So this time around, I'm going to increase it to 150,000. And let's see what happens. Sorry, hold on 1 minute. So the apparently the document I didn't submit it. So I will need to do it again. That's why it went through. Let me create another budget. Let me cancel the budget and amend it. Yes. Okay, so sorry, sorry for that. Sorry about that. So I'll just scroll down and I'll click on update. Amend actually. Let me amend it and let me change this to 500,000. Okay, so you notice when you're creating your budget, you have different options. You see stop, you see stop. So we instructed the system that once you create a budget for legal fee at 500,000 naira, that it should not allow the transaction to go. So initially we did not submit the document, so that is why it did not warn us. Okay, let me create another budget. Let me just cancel this also. Okay, so I'll do the budget. I'll do the budget all over again, and we'll go look at how the budget will function. For me, hold on. Let me scroll up. I don't know what. Okay, so I'll add a budget now. So let me take my time to do the budget. So you can have multiple distribution. I didn't do this earlier, but let's have a monthly distribution. So I can just create monthly. Now, once you click on create, what it asks you for is how do you want to distribute this budget? Do you want to distribute it across the whole year? If you scroll down, you can see that this is distributed across the whole year. You can just save it. Okay, name cannot be monthly distribution. Okay, so you need to change the name. So monthly budget. So save this. So once we save this, it takes us back to the budget. Okay. The cost center is not the cost center for the gas station. So I'll put in the correct cost center for the gas station. So you can scroll down and you can now start. Let me check my chart of accounts so I can use another expense. So I'll open my chart of accounts, scroll down, open my expenses, open my indirect expenses, and I'll use administrative expense. So my admin expense, the budget is, let me make the budget 200,000. So once I make it 200,000, I'll save this document. Now, when you're about submitting, it asks you, action if accumulated monthly budget is, so you can say, let's just say, let it stop it. So you can warn, you can ignore, and you can stop. Now, you need to be very careful because of it's cost center sensitive. So I can decide to change it from cost center, remove cost center completely, put it on a part whereby it doesn't require any cost center, or I can put it on a project. It will ask me for the project name, but in this case, let's just leave it on cost center. It will ask you for the cost center. So let's put it on the main gas station. So we save this document. So administrative expense. Let me refresh it. I guess maybe it's network. It's affecting it. Let me scroll down to be sure that everything is the way it's made. Okay. So I'll change this to stop. Administrative expense. Transcription. Monthly budget. Yep. Now submit this. Okay, so let's go to our accounting. I need those pass and expense and administrative expense. So let's go down to our item. Let's add an item. So for this administrative expense, we want to pass 500,000. Click on a bit. Go down. Make sure that the accounting details admin expense. So we can check the accounting dimension. We can say, okay, it's main cost center. So let's try and save this document and see what happens. Let's try and submit it. So you notice when we try to submit this document, it pops up an error message for us. It says accumulated monthly budget for account administrative expense against cost center main is 50,000. Now it will be exceeded by 450,000. So it did not allow us to post this transaction because of we created a budget. We created a budget for of 200,000. I mean 200,000. So we created a budget for 200,000. If you divide 200,000 by 12, you find out that each month you should have nothing less than 16,000, right? Is that it? So let's reduce the amount that we want to charge to admin expense. Let's reduce it to around 15,000 and see what happens. Save this. Now let's submit it. We find out the transaction has gone. Now let's try submitting another one and let's see what is going to happen. Since we did 15,000, so let's duplicate this. Go down. Let's make this 100,000. So depending on the way you set the system, so you can set it in such a manner that it will warn you and it will not stop you. So we saw those options there, but we selected that the system should prevent whoever is trying to post that transaction from posting that transaction. So regardless of whether you use the purchase invoice or you use the journal entry, the system is always going to still behave the same way. So you can see now that it's giving us another error. It's saying accumulated monthly expense for this account is 50,000. It will be exceeded by 65,000 naira. So that means if we change this to 50,000 naira, it will most likely go. Let's make it 40,000. So accumulated cost center for cost center is 50,000 naira. It will be exceeded by 5,000. So let me look at how the budget that we created to be very sure. Okay, so we're in March, so that's 16,000 times 3. So what the system is doing is you'll find out that we created a budget from January, February, March, like that. So it will divide your 200,000 naira by 12, and depending on the month in which you are passing that transaction, it will depending on the month in which you are passing that transaction, what it's going to do is it's going to have a cumulative effect. So if we divide 200,000 by 12, it means each month we have 16,000 naira times 3. So that means the amount that we can spend as at March, because of we did not run any transaction in January, we did not run any transaction in February, and we're now running the transaction in March. It means that 16,000 naira in January, 16,000 naira in February, and 16,000 naira in March. If you add it together on the system, if you use a calculator, it will give you 50,000 naira. So you can't spend more than 50,000 naira in March. You get in April. Sorry, yes, in April, if you don't spend the excess that we've been carrying forward from January to date, you might still be able to spend it. So if we reduce our budget to like around 20,000 naira, this transaction would go through. So we click on yes, transaction goes through. So the reason why it wasn't going through was because of what? When we created our budget, we told our budget to do what? To stop the transaction. If the transaction exceeds the budget that we are creating, it should do what? It should stop it. Now, if it was on 1, it will flash the message. It will flash the message out that you are exceeding your budget, but it will still enable you to complete the transaction. Now, as I said earlier, regardless of whether you use the journal entry or use the purchase invoice, as long as you set a budget for that particular expense head, the system is either going to warn you or it's going to stop you from posting into that particular ledger. Now, adding a monthly distribution is not compulsory. Now, if you add a monthly distribution, what does that mean? It means that whatever annual figure you put here, the system is going to do what? It's going to spread it over a year. Now, if you spread it over a year, what happens is the month, any month in which you do not use the expense, the allocated expense for that month, it carries it forward to the following month. So in simple terms, what that means is from January to, let's say, December, if you don't incur any administrative expense, in December, you can decide to incur the whole of the 200,000 naira administrative expense. But if you've been incurring administrative expense from January, based on how the system has distributed the expenses, in January, you might not be able to spend the 200,000 naira budget for administrative expense. Now, peradventure, we left this place blank and we made it annual. What that means is that if we incur 200,000 naira in January, it means that in February, we can't, the system will not allow us to incur any more administrative expense. It's not allow us to incur any more administrative, except we come back and we cancel the budget or we amend the budget, then we can incur more expenses. Then also, you should, let me do another budget and just make that much more explanatory. Let me look for an expense that I want to use. So, create the chart account again. Yeah, use travel expense. So, budget this. Add a new budget. Okay, so this is where the error is coming from. Someone selected this. Let me just this is one for the company. So it's actually for the cost center. Select the main cost center. Now, because I've already created monthly budget, I can create quarterly budget. I decide to go to create. Now, once it brings out this, it's actually for the fiscal year. So you can have for different fiscal years. Now, what is this saying? I can decide to edit this and make it quarterly. What that means is I can do what? I can change these ratios. I can say, okay, January ratio should be, but note everything must be equal to what? 10%. I make this 0, 0, 25, 0, 0, 0. Save that. Now, if you look at what I did, you notice that I manipulated the data here. You see it. I made it quarterly. So what that means is it's not going to apportion anything in January and February. It's just going to apportion it in. So you can change it. You can whatever way you want to apportion it. If you are using monthly, you can make it evenly. You can make it quarterly. You can delete. You can do whatever you want to do when you are creating this particular part of the budget. But in this scenario, let me just even wipe out the monthly distribution. I don't want to distribute anything. I just want to create my budget. And I'll come here and I'll type travel. I'll select my travel expense and I'll put the budget I want to put there. Let's say 150,000 naira for the year. Now, once I put 150,000 naira for the year and you save this, automatically when you save this, it will ask you what you want to do. 1 or stop. Let's leave it as 1. So we can scroll up, make sure that everything is in order. There's travel expense. Submit this document. We submitted this document. Now let's use our purchase invoice. Let me duplicate. Scroll down. Yeah. Travel expense. Travel expense as 200,000. And let me create. Oh, sorry, 200,000. Enter the amount. Click on edit. So you can always add description to the transaction. Transport fee for conference. Go down. Sorry. Select the discount award account. Oh, this invoice is cracked. Let me do a fresh one. That's 200,000. Or travel. Come outside. Let's save this document. Let's save this document. And let's submit this document. Now notice when I want to submit this document, it will say something to say accumulated monthly account for travel expense against. So you can say it will be exceeded by 50,000. You get. So our budget was what 150,000 for the year, but we want to incur a cost for 200,000. So it has already given us a warning. But let me see the settings I will put there. Sorry. Oh, so we told it to stop. To warn us, then stop. So if you reduce the cost to 150,000 naira, so if I open the transaction and I change it to 150,000 now, it will go through. So that takes us to through budgeting. So the transaction has been submitted, and you can see now it has changed as on page. The transaction has gone through. So that takes us through budgeting. So next agenda, go back to. So we've looked at tax, we've looked at budgeting, and our last affair for today is going to be our accounting reports. Now, basically today we're going to look at 4 types of accounting reports. Now, as I mentioned earlier, it's not limited to financial statements. You have account payables, you have account receivables, and you have the P&L, and you have the balance sheet. So this is just the reports part of the system, and we're not going to be running anything. We're just going to be looking at the reports and we're giving our own interpretation to it. Although yesterday we looked at these things in passing, but we're looking at it critically, more critically this afternoon. So let's go back into the ERP. Okay, so accounts payables, account receivables. Now, let me ask somebody a question. Okay, so Mr. Ubong, what do you think is an account payables and what's the difference between an account payables and an account receivables? That's Ubong, sorry. Hello, Mr. Ubong. Okay, does that?
Okay, so sorry, is Miss Ufreke.
Oh, sorry, sorry for
Good
that.
afternoon. I was not really in class yesterday because I had network issues, but I went through it. Then I raised up my hand. I'm sorry, I want to just take you back a little. I
Okay.
raised up my hand and you did not see. About budgeting, I got to the point of the distribution
Okay.
where you talked about monthly and quarterly distribution of the budget. And you talked about January 0%, February 0, March 25, and I got lost. And you said everything must be like it must be 10%.
No,
And I
it
got
must be 100%.
okay, it must be 100. Okay.
So it's a distribution over 100%. So by default, once you select monthly, because it's quite tricky. If you divide 100% by 12, let me do that now. If you divide 100% by 12, you'll be getting 8.333333. You get so the system helps you to already split that evenly on your across your months. You get. But if you want to customize it, you don't want to distribute. You don't want to distribute your budget evenly across your months. You can now go and change the rate. But if you are changing the rate, you should make sure that at the end of that 12, from January to December, whatever rates you put there, when you add them together, it must sum up to 100% on dot. If it is less than 100%, it won't go. If it is more than 100%, it will not save. So I don't know if that answers your question.
And because of that, I was totally lost from that point.
Okay. So does anybody have any other questions similar to what she said as regards budget and tax? So that we're not taking back. Because I noticed I didn't see your hand raised because of I was engrossed on what I'm doing. But next time you can always just unmute and just ask me the question. So does any other person have a similar question? Okay, so let me ask Ayodeji. Is Ayodeji on the call? Hello. Okay, no problem. So let me just go back and just touch the budget. So from here, you can just type budget. You select budget list. Now you can also scroll down on the accounting module, which I did earlier when I was, if you go back to the video, you'll see when I scroll down and I selected the budget. It takes you to the budget interface. And let me just clear this. This is one of the things that's causing problem. Now I add a budget. Now I want to click on add a budget. This is how you manage your budget. And I'm just going to explain everything that is here. It asks you whether or not you want to use a cost center to distribute your budget, or you don't want to use anything to distribute your budget. It will ask you if you want to distribute it on a monthly basis, or you don't want to do so. Yes, on a monthly basis, or you don't want to distribute it on a monthly basis. You can use the one that was already created on the system and select it. Then you scroll down. It will ask you which account you want to add restrictions to, budget to. So I can add entertainment. I can add, let me scroll down. I can add, let me use miscellaneous. And I can say, okay, this should be 500. This should be 500. It can be more than that. And I save this. So your budget must always be against a cost center. So I'll save this. Now, immediately I save this, before I can submit, if you scroll down, let's read the option. It says applicable on actual expenses. Action if annual budget exceeded on actual. What should it do? It should stop it. Now we did not change this. We left it at stop. So if you drop these two at 1-1, what that means is it's going to give you a prompt that, oh, you're about to exceed so and so, but it will still enable you to do what? To continue. So you save this. And you submit. So if we should try the example, one more time. That's 600,000. Let me select the expense head as entertainment. So let me save this. Let me submit. So the document went through, it submitted, but it gave us a warning. It said our accumulated monthly budget for so and so against. So it gave us a warning that we exceeded our budget quite all right. Yeah? But it still did what? It still submitted our purchase invoice. Now the thing is, if you want greater control, it's always advisable not to put it on 1. It's always good to put, if you're actually very strict with your budget, it's always good to put it on what? On stop. So if you put it on stop, it will not enable you to proceed. So if you look at what we did, if you open it, you find out that we kept it on just 1-1. So it just wonders, and that's all. But transaction was to go through. So if you put the 2 on stop, if you put it on stop, it will restrict you from proceeding on capturing your expense. So I don't know if I answered your question, madam.
Yes, thank you very much.
Okay, so the last part of this session for today is, since I notice participation is very low, is going to be the accounting reports. So we'll be looking at the account receivables report quickly. If we open the account receivables report, it shows us our debtors, people that are owing us money. And this is the name of all the people owing us money. The report is very self-explanatory. You can scroll to see, you can see the name of the person that is owing you, you can see the particular chance. So all these links you are seeing, they're actually clickable, and if you click on it, it will refer you to the particular transaction. Okay, so this one was the opening entry. So if you click on this, okay, these are journal entries. If you click on this, it will show you the sales transaction that was about this debt, and you can evaluate it. You can say, okay, we sold them 5 kg similar to this person. So that's just the account receivables report. If you scroll down, you can scroll from left to right. Everything here is self-explanatory. You can see how long this debt has been owed. So this color bar, these color bars, it tells you how long. It tells you the portion of how the distribution of how long your monies have been outside, because these are all debts that is owed to the business. So you can see 0 to 30 days, between 31 to 60 days, 61 to 90 days, 91 to 120 days, and 121 and above. So this is your account receivables report. You can always export this report. You click here and you export it. You download it, and you can always interpret it further. So this is one of the reports. So we have the accounts payables report. It is very, very similar to the account receivables report. Very similar to the accounts receivables report. But what this one shows us is, it shows us people that we are owing money. So if you scroll down, you see the accounts payables report here. You click on it, it opens up and it shows you people that you are owing money. So it pretty much works the way an accounts receivables report works. It tells you how long you've been owing people money, and you can always refer to the document, and you can also download this document also by clicking these buttons and exporting it and downloading it. So that's the accounts payables report. So the last 2 reports, we looked at it yesterday. So they are more of, they form part of the financial statements. So if you scroll down, you have numerous reports. So you can see financial statement, you can see your trial balance, profit and loss, balance sheets, cash flow, and consolidated financial statements. For example, if you open your profit and loss, everything here is actually self-explanatory. You can change this to monthly. You want to be seeing your P&L on a monthly basis. And you scroll down, you see all the transactions, your sales, and all your expenses. You can always export this document also. Then you can always filter cost center by cost center if you want to, and you just view the transaction. Then also your balance sheet. We looked at that yesterday also. Just scroll down. You open your balance sheet. This is your balance sheet, and if you want to view your balance sheet also on a month by month basis, also you can also click this, change this to monthly basis. But typically, you prepare your So you can see your balance sheet, you can see all your balance sheet items on a monthly basis. So this is a quarterly basis actually. So you can change it to a monthly basis if you want to see it on a monthly basis. And it's also exportable also. So you can always download this and look at it critically. So with that, this brings us to the end of the accounting module. And we'll have an interactive session just to take questions. So any questions? Any questions? So if you do not have any questions, we'll call it a day. So the slide is available, the recordings are available, you can always go through it, and when anything that is not clear there, you can ask your questions. So thank you very much. And that's bye for me. Thank you.
Thank you so much.
Thank you, Mr. Tokpa, for this session, and for every person that has learned in class today. We say a big thank you for making yourself available. Like we said, the cost of this training is our commitment, and we could see that a lot of us are showing that commitment, and at the end of the day, it's going to be of our own gain and profit. Like we already stated and made clear, we are going to be sharing the recording of this session again on the group subsequently, and the class continues tomorrow. Tomorrow, we'll be having our class on inventory management and manufacturing. And that class will be taken by one of our resource person, in person of Lami Ibrahim. She'll be ready to take us on inventory management and manufacturing. Without wasting too much time, because I know it has been a long session so far, we will release us so that we could have some time to relax. And by the time we send the video, we would expect us to go through them all over again at our own pace and learn over and over again. Thank you so much for today. See you in class tomorrow.
All right, thank you so much.
Yeah, thank you. Thank you very much for the insightful class. Thank you, Mr. Shegun. Thank you, Mr. Tolu. Yeah, thank you very much. I learned a lot today.
Thank you once again.